Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Today we would like to talk about the Great British Pound, because here we have an interesting trading setup that might be, well, attractive within a couple of sessions, I suppose. So on euro currency, you can see, well, actually due to holiday in the United States, it's dynamic price action, so market is squaring around the lows, showing minor wash and rinse here, while erasing the grubber that we discussed, where I have some suspicious, as I talked about this in the weekly report. And actually, we have here dynamic price action. It is actually understandable because this market is preparing for European Central Bank decision, although it's 75 basis point change is anticipated. But it is more interesting what comments we get from the Christine Lagarde. So, as you know, and we talked about this many times in the weekly reports, the European Central Bank policy looks absolutely anemic. It's lagging behind the Fed, and well, the comments that have been announced and measures that European Central Bank has announced in the struggle with the inflation looks absolutely doubtful. It's just because from one point of view they're increasing the rate, on another point of view they provide some stimulus support to the population and the different assets to fight the rising prices of the energy. And third, they announced the analog of quantitative easing programs, so we will, as they said, we will keep an eye on the bond yields of highly indebted countries such as Italy, Portugal, Greece, and then we will see whether we will buy out these bonds out of the market to control the interest rate. So this is nothing more but actually quantitative easing. So it considered they are trying to fight inflation from the one hand, but from the other hand, they're increasing the inflation. So it's the same like the fighting fire with gasoline. So anyway, we will see. That's why today, actually, guys, I would like to talk about Great British Pound. So here, as you can see, butterfly on the daily chart finally has been done. As you can see, market reached 1618 extension. As you know, this Liz Truss has been elected as the new prime minister of the Great Britain. So, well, I don't know whether it's positive or not, but anyway, this political event that has happened and maybe could provide some short-term support to the Great British Pound. So technically, we have the 1618 extension, and butterfly suggests the bounce at least to the 30% resistance level, 1760 approximately. This is minimum target of the butterfly. Also take a look here, we have a confluence and natural resistance, which is a previous lows. This combination creates great background for repairing of the bread butter sell, because here we have good thrust on the daily chart and reaching of the 30% level. I don't know whether the market will go higher or not, but currently 1730, 1760 is an area where we could think about taking the short position. Here we do not have an interruption of the thrust. We have no close above the 3x3. Yes, here we have minor retracement, but it is less than 30% of this recent drop. Without closing and less than 30%, it should not be treated as a breaking of the thrust. Here we should treat it as a single thrust down. And here we're watching for this area. And on the hourly chart, as usual, and typical for the Great British Pound, it's like to form the head and shoulders. And here, as you can see, the half of the pattern already stands in place. Here we need just to keep an eye on the drop somewhere to the 115 area, maybe slightly smaller. Just keep an eye on possible extensions that could point on the bottom of the right arm. And then it's possible upward action. That should lead us to supposedly to the resistance area where we consider taking the short position. Scalp traders also could keep an eye on the possible head and shoulders. If you'd like to, you could try to take position here. Risk will be somewhere around 60-70 pips probably. One of the targets stands at 1670, but if you'll take a look at the daily chart, you will see that 1670 is a bit lower than we need to get the bread and butter. But for example, it might be also double repo. We do not know. So if it will be a retracement smaller than to the 30%, its market will keep chance to form the double repo as well. So just keep watching what will happen. If we will get action to the XOP or to the classical target of the hand shoulders, as I show you here. This is a classical calculation of the hand shoulders target 1744. That is more acceptable. So this classical target shows precisely on an area of the confluence. And whatever it will be, just keep an eye on the patterns. We know that might be bread and butter. This is for sell entry. We know that it could be hand shoulders. Scalp traders could watch for the hand shoulders. And on the daily chart, we also could keep an eye on the double repo buy, which means that retracement might be a bit stronger. Depends on how market behaves with the 30% level. As you know, if market hits 30% within the 2-3 closes above the 3x3, that will be the bread and butter. If market will not reach this level, starts calling, forming double repo, that will be the double repo. And this market could show a bit deeper pullback. Anyway, on the Great British Pound, you could see that we could get multiple patterns on different time frames. Choose what you like more. And in general, I suppose that you understand the overall idea that I would like to share with you. And well, currently at least the pound looks more interesting than the euro currency.